It's mind-boggling that like when I was reading this, I'm like, you cannot make this stuff up. Alrighty, guys, in this video, I'm going to be reacting to Kyle Busch's public lawsuit with Pacific Life. And we're first going to hear from Kyle himself on Instagram. Then we're going to get into some of the big things that went wrong in this, and I'll give you my take. I actually read the entire lawsuit, and then I've talked to some insiders that know more than maybe what the public knows. And so overall, what Kyle's got to go through and his family's got to go through is tough. It's not right. And just wait till you start hearing some of the things that actually went on in this case. It's mind-boggling. But at the same time, I do think that there's going to be a lot of good from this, but there's a lot of things in the middle, and there's going to be a lot of mix-up. So without further ado, let's play the video that made waves on social media and on news stations. Guys, I'm telling you, it's rare that life insurance gets played in the news. It's rare that ESPN and Fox News and CNN will all report on the same thing. I've been hit up from people that just know that I'm in the insurance space, don't watch any of our stuff, and they're like, hey, what's your take on this? And so when I get hit up from those type of people, I know that this story is way bigger than I originally thought when I first heard it.
As many of you may have seen, we have a press release out that we are in litigation with Pacific Life in regards to IUL policies and insurance policies that are also retirement policies for planning for our future. And unfortunately, ours did not go well.
Yeah, as you'll hear when this broadcast comes out, it was a major scam. We tried to do what we thought was best for our family, for Brexton and Lennox. We were trying to be financially responsible for them and plan for our future. And little did we know that by investing money in this scam, it's all gone. And so the reason we came out here today is, as you guys know who've followed us for a while, every time God puts a struggle in our path, we're going to try to use it for good. And so we're out here speaking out about what happened, because this just isn't happening to athletes and celebrities. Right. This is happening to teachers, police officers, veterans. This is happening to widows. These are people who are 70 years old. They have nothing else to fall back on. These are people who are, they've worked hard, they've made a small business, they are ready to retire, and they buy into these scams and they lose absolutely everything. And so, Kyle and I will use this platform to try to do all the good that we can. And so we're going to keep fighting Pacific Life, and we're going to show the world that this was a huge and utter scam.
That's right. So tune in for further updates as we come along further in the case.
Okay, so obviously this is blowing up because, Kyle Busch is a really big deal from NASCAR, and obviously it's bringing a lot of attention. It's not the first time something like this has been brought up, but it's definitely going to be one of the biggest deals when we look back on just history on life insurance, and we're only getting started. This is what I'm hearing from some insiders, that we're going to hear a lot more from this. And so here's what went on, and I will, obviously names are public. So if you want to go, I'll make sure the link to the lawsuit is down below. You can go check that out if you want. But I wanted to give you like an overarching, like, what are some of the things that we're dealing with here? First thing is, there was a lot of just misleading language and overselling just from the concept itself. So that was number one. Then there was a lot of negligence, allegedly, I should say. Allegedly is going to be my word for the day. So there's a lot of allegedly negligence that went in when it came to the type of product that was being sold, how it was designed, and then some balls that were being dropped as well. There's also, they're suing Pacific Life as well, just pretty much saying like, hey, whenever you do a big case, you guys have to look at what's going on. You saw everything that happened. You were okayed it. And then the agent on top of this, I'm going to be hard on him on this video. He also had some even sketchy things where they even made the point that he shouldn't even be allowed to practice in the state of North Carolina because he didn't disclose allegedly some of his, record when he even got his insurance license in North Carolina. So there's a lot going on. And then there's 1035 exchange that happened within that. So imagine doing a really, really poor job on a policy and it's falling apart. And then you do an internal exchange in the same company and get more commission. It boggles my mind as I was reading through this, and that's what happened. And so all that to say, I'm going to break down what I know, what I've heard from some insiders, and then Bobby Samuelson, who's a friend, he's a friend of the channel. He did a phenomenal article, and we will also link that down below. Make sure to give him some support and love, because he did a phenomenal job on breaking this down. So a couple of years ago, I think the agent first met Kyle Busch when in 2017, and they're alleging that they lost over $8.5 million in this deal. They put more than $10 million into this whole deal. And so when I heard this for the first time, I think like a lot of people, I was like, this has got to be some type of premium finance thing that go bad. For those of you that don't understand premium finance is when you're getting life insurance, you're getting a bank to loan you money. Everything looks great until it doesn't. Banks can go south, interest rates can go up, and then you can be underwater. And then when I learned to find out that this was not premium finance, I was like, man, like what is happening? Because those of you that know where we stand, we don't do a lot of IULs, period, for the same reason. Majority of what we do is max funded whole life insurance, but we review IULs all the time, and not all of them are structured well. In fact, most of them are not optimally designed, but they're nowhere near the ratios of putting in this amount of money, and then a little over 5 years later having it be this big of an issue. And so there's something in my head that was like, this is not even a bashing a certain product video. It's like there's something that went wrong. And so the first red flag in just reading this lawsuit was the language that was being used. Their agent that approached them talked about there being a special proprietary thing that they had access to with this company that helped athletes. A lot of people say that. There's nothing necessarily true about that. There's nothing new under the sun. If a lot of these companies, anyone can have access to their products if they're licensed with them. And so that's maybe a sales way, but that wasn't as bad as he would say multiple times, allegedly, that you would get guaranteed income for life, and then a lot of times using tax-free guaranteed income and all. And so our life insurance products have some guarantees, yes, but for you to strip that guarantee language and put it for guaranteed income for life, not at all. And so what was being pitched is that these financial products, and you even said in the language that they're using the word investments multiple times. What does that tell you? These things are being pitched as great investments, which you could know that insurance is not an investment, but they're being pitched that they're investments, and they're really being leveraged for income. That's why we've had multiple people, including Bobby, on this channel that has been very clear: do not sell life insurance for some future income. So many people do it. It's a common practice for IUL to be sold that we're going to sell these things, put your money in here, all these things, and then 20, 30 years, look at how much income you can get. It blows whole life out of the water. It blows your Roth IRA out of the water. The problem is it's not true. You can make an illustration look so dang good because you're showing zero losses and you're able to finagle certain things, but at the end of the day, it's not going to work the way that you think it is. And this is a classic example of some of the things that were being done could still be done today with certain products, including this company. I just can't imagine losing over $8 million. That's just mind-boggling to me. And so the reality is there's still many, many problems with that. And so the language of guaranteed income and all this stuff, like they're being pitched that this thing is going to be amazing. To this day, people can use life insurance illustrations to show income. It's not recommended. And I just would encourage any of you watching this that meet with clients, do not show income. You can say that there's a supplement income. I prefer talking, especially when it's coming to whole life, as a maybe a bond alternative, talking about how life insurance can work with other financial products and how it can enhance it. But I would not lean on heavy income projections. Now, with whole life, it's harder to get yourself in hot water because with whole life, you're dealing with some very fixed things. A lot of people say whole life is super boring because you can't necessarily pump it up. With IUL, there's something called an index, and you can make it look pretty dang good. And then you can even do some interesting things with loan arbitrage. And all that is saying is you can make illustrations look really, really good, but the reality of them happening is not realistic. And then the reality of them being way off is greater. Because it's not like, oh, you're off by 1%, so now projections need to change. No, we could be off by so much that the policy is not just not going to perform well, it's going to blow up. And that has been done. And there's a lot of moving pieces when it comes to IUL, which brings me to point number 2, which is the negligence. Part of my issue with IULs is there are so many moving pieces, and the amount of people that are selling them and not sticking around to servicing them well is big. There's a lot of people that get into these companies and then don't survive in the business. And so the people that they served, teachers, their neighbors, their family members, have these products that the person setting it up probably doesn't even know how to properly do it ongoing, but then they're out. And so now they're not being looked after. And so all these things hypothetically in a perfect world could be great, but so often people aren't even getting a perfect world. If a NASCAR driver was getting the ball dropped, putting in over $1.5 million a year, imagine what other people that don't have that much money potentially are getting overlooked. And so there's a lot of moving pieces. Well, allegedly in this policy, there were a lot of things that were missed. Number one, it was designed to make the commissions go from $500,000, which is a lot of money, to $1.5 million. Well, anytime you're getting a commission that's coming from somewhere, i.e. you, the consumer. And so the product that was being used was literally just picked to maximize the commission while still on paper showing that it was doing something good. And so that was number one. Number two, there was in the lawsuit, they essentially said that there was never a switching from an option of the death benefit to make it more attainable. That was allegedly said that would happen. That never happened. Then also Bobby is mentioning in his article that they were never actually in the index. Their money was in the fixed account. So imagine they were just getting crushed with cost of insurance, crushed with commissions. Kyle was a NASCAR driver, so on top of that, he was even paying more, and their money wasn't even in the index. Like, it's mind-boggling that like when I was reading this, I'm like, you cannot make this stuff up. Like, unfortunately, a lot of people are going to read this and be like, oh my goodness, everything, life, and like, you imagine the people are going to have a heyday that hate life insurance. They're going to have a heyday with this, but you just got to understand, was there language being used that shouldn't have been used? Yes. But more importantly, was there like just the product design, the max commissions that were set up, the forgetting to switch the death benefit, the keeping their money in a fixed account, like all these things were piling up. And then, so this thing is going underwater. It's not performing well. And then they according to the lawsuit, do a 1035 exchange, which a 1035 exchange acts similarly to like 1031 exchange, where you can take cash value and exchange it to another insurance company, or you can do it internally. And it's a way for you to take what you have, put into another policy, and still everything tax-wise remains good. So it's a great option, but a lot of cases you don't want a 1035 a policy that's performing well or mature, because you have to restart all those costs. Well, imagine doing that. Like, imagine setting up a policy, it's not doing well, and then you 1035 it in the same company, and you get more commissions. And in a way, when you look at that objectively, you're not necessarily bettering them off. That's where Pacific Life comes in a lot on the negligence side, for even offering a product that you can switch how much money you get paid that much. But then also, like, they're just saying, hey, this happened. Yes, the agent made this, but like, you're also involved. And so that's where they're getting involved. But overall, very, very sad scenario. I think what the agent allegedly did is terrible. I just think it's horrible what I'm seeing, just from a straight up being misleading with language, but then seeming like it's a total money grab, total greed, and then not even fulfilling on what potentially could have salvaged this thing. Like, it's one thing. I'm playing a dangerous play by trying to like play the other side. It's one thing to design something and maximize the commissions and all. That's one thing to say, don't agree with it. Obviously, a big part of our business model is very transparent. We're max funding. We're just on different planets. I know it's life insurance is the same message, but trust me, it's different planets that we're on. So it's another thing to maximize your commission. And then the gall of just not even optimizing it and designing it well and having the nerve to continue to meet with clients is negligence on a crazy level, or just straight up, part of me is just like, does this person have a bone to pick and intentionally trying to, I know that sounds crazy for me to even say out loud, but what's going on here? What's actually going on? And for something like this to happen to something that's not even a premium finance case is wild, and I think is going to open up the area for lots of more people to potentially get involved. Will we see a class action? Who knows? But I think that this is pinging a lot of people's ears. So here's my takeaway to this whole thing. And by the way, I did reach out to the attorney that's representing Kyle Busch. I have some connections with him. I'm sure he's being flooded, but I would love to have him on the show and have him walk through real time what's happening. So just stay tuned. If you're not subscribed to the channel, would love if you could subscribe, and we'll just stay tuned for a potential interview with that. Here's my takeaway. Number one, life insurance is not an investment. For those of you that are not new to the channel, have seen a lot of our videos, I say this so much. Life insurance is not an investment. It's not an investment. It's not an investment. It's not an investment. The reason I say that so much is because of stuff like this. There are people that are selling it as this is going to be X, Y, and Z. And I think that's misleading. And we, for years, I grew up learning about insurance, and I grew up learning from some people that use the income, and so the early on, that's something that I used. But as I started learning about this, I'm like, man, I don't ethically feel good showing something, even in whole life, that's probably not going to happen. And so it's like, yeah, it's a supplement. Yeah, of course, it's something that you can be used, but I would really encourage people to not heavily use that and talk about the fundamentals, talk about, what happens, like the benefits while you're alive, the benefits early on, the benefits, going forward, the benefits of how life insurance can interact with other assets, and educate people. Yeah, that takes a little bit more work. Yes, does that make life insurance less sexy? Probably, because we're not showing it as a rosy, gonna be 10 times better than your Roth IRA. Yeah. But is it the right thing to do? Yes. And is life insurance an amazing asset when set up properly? Yes. And am I hoping to get other people that hate on life insurance to at least come to an understanding to say, hey, you may not love this for everything, but life insurance plays a role. And I would love for people on all aisles to at least acknowledge, yes, the way that it's sold most of the time does not play a role. The way that it's designed does not play a role. But if designed and planned well, I believe that life insurance makes many people's financial lives better, straight up, and we're not even saying take any unnecessary risk. I just believe when set up and used properly, it makes your whole financial plan better. But it feels like we're on different planets sometimes, because I'm positioning it as I'm integrating it into the plan, and I'm also structuring it in a way where we're getting 1/10 of a commission of what some people are positioning over here. And I'm not saying I'm guaranteeing that this happened, but I very much believe that life insurance was positioned, and by positioning it was bad-mouthing other assets. Don't put your money over here. Don't invest over here. You would have to earn X, Y, and Z to produce this income. And I'm telling you, it sounds great on a pitch, not going to happen in real life. So the takeaway is, number one, do not get caught up in the hype. And if you are selling this stuff, please think of yourself as if our meeting was recorded and broadcasted to the world, would I be proud of this? If someone broadcasted their plan, would you be proud of that? That's number one. Number two is designing these products matter. In whole life and IUL, they matter. And we need to do a better job sharing the power of max funding. And I hear you in the comments. If I know there's a world for estate planning and all, I'm talking about in this lawsuit, the Bushes were very, very clear that they wanted cash accumulation and retirement income. They didn't say anything about death benefit. So I believe death benefit is important. But if someone comes to us and says, I want to maximize the living benefits, we got to optimize that policy. And a lot of people say they optimize, but they're straight up not. And so again, if you have policies that you're unsure if they're optimized, we as a team will do reviews. And if you're wanting to work with someone or talk to someone about what that looks like, we'd be more than happy to help you. And just know that is so important. And yeah, there's a lot of good companies out there, but every company that you work with, there's a lot of different ways that you can structure policies. And a lot of people that are saying they're optimizing are not fully optimizing. So that's the other thing. And then I think the third thing that's going to come from this and the takeaway is I just think insurance companies need to do a better job. I think they're going to be more strict of what flexibilities they give people. I think there's going to be a lot of ripple effects, and on one side, I think it's going to create a lot of exposure, but then there's also going to be lots of people that have no interest in learning at all about life insurance because they're like, life insurance is a scam. And so that definitely feeds and stokes the insurance is a scam narrative. And it just means we need to do a better job educating and saying not even IUL should be put into this category. There's a lot of people doing IUL, max funding it, well, not doing anything, like not even putting themselves in this category and doing it the right way. Would I agree to disagree on some philosophy areas there? Yes, but there's no way that they would even be put in this category. So that is my take, and look forward to hearing your thoughts in the comments. And then my hope is that we can have a sit down interview with the person that's really behind the scenes that's bringing this lawsuit, because I know that this person is also working on many other things to come, and maybe we can get an inside scoop on some of the things that he's working on. So anyways, thank you so much for subscribing. It's a dream that I even have a channel that people want to tune into, and just know that in some cases we're just getting started. It's things like this that are more motivating than ever, because it's like we need to do a better job across the board. Anyways, peace. We'll talk to you soon.